This RV newscast will cover the latest RV and travel data news. June 2026 RV production numbers are out, and we'll cover the latest RV travel data so you can better gauge if it's time to buy, sell, or hold an RV. Later in the news, we'll look at recent results from large industry players. I'm John Marucci. Let's get started with the news. On July 26, 2026, the RVIA posted the latest RV wholesale shipment data for June 2026. Production was again down significantly compared to the prior year, with 25,484 total RVs shipped in June, down by 3,848 units, or 13.1% year over year. June 2026 was the third lowest production June, just ahead of 2023 and 2024, since before 2016, as seen by looking at the June-only bar charts. Compared to a year-to-date 2025 volume of 190,705, 2026 through June is down by 27,061 units to 163,644, or down by 14.2%. 2026 year-to-date through June was the lowest year-to-date number since before 2016, including 2020 year-to-date during the pandemic. Travel trailer shipments decreased year over year, with 17,770 units shipped in June 2026 compared to 20,730 a year ago, representing a decrease of 3,023 units, or 14.6%. Travel trailers had their second lowest June on record since before 2016, as seen by looking at the June-only bar charts. Compared to year-to-date 2025 volume of 131,957, 2026 through June was down by 21,698 units to 110,259, or down by 16.4%. Besides 2023, 2026 is the lowest year-to-date production run for travel trailers since before 2016. Motorhome shipments, which include Class A, B, and C motorhomes, were slightly lower than in June 2025, with 2,756 units shipped versus 2,800 a year ago, a decrease of only 44 units or 1.6% year over year. Motorhomes had the second lowest June since before 2016. Compared to year-to-date 2025 volume, 2026 through June was up by 1,832 units to 20,495, or up by 9.8%. Before we review our RV Trader data, we need to address a very real data issue that showed up during July for new RVs for sale. New units for sale went from over 125,000 on July 1st to just 95,000 by the end of the month. Lately, new units have been losing about 6,000 per month. So the nearly 30,000 drop in July is fishy. In my opinion, this can only really point to a very large customer or dealer pulling a large number of new RV listings from advertisement on the site. Only one dealer group can carry this much weight, which corresponds to Camping World speaking of reducing selling expenses in their latest quarterly report. RVs for sale on RVTrader.com have decreased sharply since last month, with 94,151 new RVs listed as of August 5th, 2026. This is down sharply from 125,235, or 31,084 units, or 24.8% from a month ago, or down by 28,941, or 23.5% from a year ago. My take is Camping World is pulling back on advertising, which is a signal that more local discounting is available. They may have given up on nationally advertising new 2026 units. We'll look at Camping World financial results in a moment. The number of used units for sale has increased slightly since last month, with 72,481 used RVs for sale as of August 5th. This is up by 674 units, or 0.94%, compared to about a month ago, but down sharply by 6,310 units, or 8%, compared to a year ago. Our model year chart, based on weeks on market, shows that 2026 models are falling off rapidly and are now well below 2025's at the same time on market. This relates to what we just mentioned about the potential of Camping World reducing advertising on new 2026 models. At the same 75 weeks on market, there are many fewer 2026 models versus 2025's. As a reminder, many but not all dealers advertise on RVTrader.com to sell inventory. It remains an excellent proxy for overall dealer inventory. You can follow my account on X at John Marucci to receive weekly updates on this data. Air travel has fallen off in the past few months with high fuel prices and recent airline price hikes. July again showed a decline and is now behind both 2024 and 2025. Air travel is down by 2% for July versus 2025 and off 0.8% versus 2024. Year-to-date 2026 is about 0.1% higher than year-to-date 2025 and an equal percent below 2024. Air travel is a leading indicator of economic activity, especially of discretionary spending. Gas prices have risen in the past month. According to AAA, the current average nationwide price as of August 5th was $4.08 per gallon for regular unleaded, up 27.6 cents from a month ago, and up 92 cents from a year ago. An RV trip of 3,000 miles at 10 miles per gallon would cost $1,224 now versus $949 a year ago, a 29% increase. Diesel prices have increased over the past month and currently stand at $5.36.2 per gallon, up 58.5 cents versus a month ago, and up $1.62.3 from a year ago. A similar 3,000-mile trip getting 12 miles per gallon would cost $1,341 now, compared to $935 a year ago, representing a 43.4% increase. Camping World reported quarterly earnings in late July, and new unit sales were down by 16.4%, while used unit sales were up by 5.2%. Gross profit overall was down by over 9% given lower unit sales, with net income after tax being down over 20%. It was a tough quarter. Camping World plans to lower selling expenses by $100 million, which likely means more layoffs and advertising cuts, the latter of which I think we are seeing in reduced new units on RV Trader. The latest quarterly report simply continues to paint the picture that the industry is in decline and that customers didn't show up this spring to buy new RVs. Used RVs still tend to be selling, and this is likely due to lower pricing and a large number to choose from. Lippert Industries, a major supplier of RV components, reported quarterly results on August 5th. Net sales were down 12.5%, mainly due to lower RV shipments. However, adjusted net income went from $60 million to $66 million, up by 9.6% due to disciplined cost-cutting efforts. Lippert is on track to merge with Patrick Industries later this year, creating a very large RV supplier. Patrick Industries, a primary supplier of RV parts, reported net sales down less than 1%, mainly due to RV shipment declines, while adjusted net income went from $51 million to $44 million, down 13.7%. This furthers the already obvious news about industry sale challenges. The big news this past quarter was a merger announcement with Lippert, another very large supplier to the RV industry that we just alluded to. This merger was not well received by industry insiders as it consolidates two large input suppliers to the manufacturers. Both Winnebago and Thor missed earnings numbers recently, also reasserting the current narrative of a major RV sales slowdown. Thor's revenue was down about 4%, with earnings after tax down over 10%. Winnebago's revenue was off by 9.9%, and earnings after tax was down by nearly 19%. There are a few recent indicators that may be pointing to new RVs becoming a better value exchange. This is not for every sector of the market, but some mid-level travel trailers seem to be getting closer to a reasonable deal. In May 2019, I purchased my 2020 Keystone Bullet bunkhouse for just under $24,000 after tax. A very similar new 2026 Keystone Bullet bunkhouse just sold at a nearby dealer for just under $28,000 before tax. If we add tax, we're talking about $29,700 or so, or about $5,700 or 23.7% more than my 2020 version. The general rate of inflation in the U.S. was 30.4% during the same period, so the similar trailer on sale is less expensive versus general inflation. My gut is that this wasn't a bad deal and that there may be new 2026 units in this camp. It seems dealers are a bit panicky about 2026 inventory with 2027s arriving, and so may be willing to deal significantly on these new units going into late summer. Given a weak spring selling season, new 2026 models can be had at decent discounts. If you're a buyer, you have increasing leverage. I'm not quite ready to call a full buy signal yet on new RVs, but I do think mid-level travel trailers are becoming a decent value exchange. With a glut of inexpensive used units available, new units are having to compete. It seems the discounted price of new is closing the gap with used, and we may be close to a buy signal for new units if the trend continues. On a final note, the all-important metric I cite regularly, that of average line tenure, is likely going up with a manufacturing slowdown. This means 2027 models may be the slowest produced vintage in recent memory, meaning more experienced line workers building at a slower pace. Quality of 2027s may be the best in a while. If this theory holds up, we'll see. If you've purchased a 2027 travel trailer, please let me know your impressions of initial build quality in the comments. Thanks. Okay, that'll do it for this newscast. Please click the like button, remember to subscribe, and hit the bell icon if you haven't already done so. Thanks for watching. This is John Marucci, and so long for now.